Around the world, trillions of dollars are in motion. This isn't the frantic, high-frequency trading that flashes across our screens daily. This is something different, deeper, slower. It's the movement of patient, long-term capital, the kind that builds nations. And this is not a sudden, chaotic rush, driven by panic. Far from it. While headlines scream of market turmoil and geopolitical flare-ups, a powerful undercurrent is moving with deliberate force, reshaping the global economic map before our very eyes. Instead, it is a quiet and deliberate global transformation. A great reallocation is underway, a strategic retreat from uncertainty. Capital is moving away from volatility. It's fleeing regions plagued by unpredictable policy, demographic decline, and fragile supply chains. It is searching for a new home defined by stability, predictability, and the rule of law. A place where 10- and 20-year investment models aren't just academic exercises, but reliable blueprints for growth. Unexpectedly, a significant portion of this financial current is heading north, toward Canada. What was once considered a quiet, resource-driven economy is now emerging as a primary destination for the world's most strategic investors. This shift is not a single event, but a developing trend, gaining momentum month by month. It represents a subtle yet powerful change in the landscape of global finance, challenging decades of established wisdom about where wealth should reside. Institutional investors, pension funds, sovereign wealth managers, and family offices are rethinking where true value and security can be found in an increasingly unpredictable world. They are looking past the noise for fundamental strengths, from the financial centers of Europe grappling with energy insecurity to the bustling markets of Asia facing regulatory headwinds, and even from a politically polarized Wall Street, a clear pattern is emerging. The calculus of risk and reward is being fundamentally rewritten. Experienced investors are methodically shifting billions of dollars into Canadian markets, not as a speculative bet, but as a core allocation. Their capital is flowing into the nation's ports, its advanced industries, and its long-term infrastructure projects, assets that provide tangible, inflation-protected returns. These are not impulsive decisions. They are made based on careful analysis, rigorous due diligence, and a deep sense of trust in the country's institutions. The movement of this money signals a profound vote of confidence in Canada's economic and political future. So, what explains this sudden and growing confidence in Canada? Why now, in 2025, is the country becoming a primary destination for the world's wealth? What are the specific policy catalysts and structural advantages driving this flow? It prompts us to investigate what global investors see that others might be missing. Is this a temporary safe harbor in a passing storm? Or does it represent a more permanent realignment of economic power? Welcome to Geo Capitalist, where we follow the money that is shaping the power dynamics of tomorrow. In this analysis, we dissect the forces turning Canada into a global capital magnet. It is a story about strategy, foresight, and the changing definition of a global safe zone. As we will explore, this trend is not just about investment. It is about the future of geoeconomics, resource security, and the architecture of a new world order. Understanding this shift is crucial for anyone looking to comprehend where power, wealth, and influence are moving in the 21st century. In today's global economy, a storm of volatility is gathering. Persistently high interest rates are tightening credit, ongoing trade frictions are fracturing supply chains, and significant political polarization in major economies has eroded confidence. Together, these forces have created a landscape filled not just with risk, but with profound, systemic uncertainty. In this volatile setting, large-scale investors, the stewards of pension funds, corporate treasuries, and sovereign wealth, are actively seeking something increasingly rare. They are searching for predictability, They want markets where the rules of the game are clear and consistently applied, where institutions are strong enough to withstand political cycles, and where multi-decade planning is not just an aspiration, but a viable strategy. This deliberate search for stability and resilience is driving a powerful wave of capital inflows directly into Canada. In 2025, Canada is projected to receive a record $200 billion in foreign capital inflows, a clear signal of its safe haven status. This surge is backed by Canada's sterling financial reputation, anchored by its AA credit rating from multiple agencies, a distinction held by only a handful of nations. While other advanced economies face the headwinds of potential recession and fiscal cliffs, Canada's steady, moderate growth sends a deeply reassuring signal to the world. These are not abstract numbers. They reflect concrete decisions by pension funds securing retirements, corporations building resilient supply chains, and sovereign investors seeking generational returns. This entire flow is built on a powerful yet simple concept we call the trust premium. In an unstable world, trust itself becomes a valuable, tradable currency. Investors will consciously pay a premium, accepting slightly lower but far more reliable returns, for an economy with a stable democratic political system, a transparent legal framework rooted in common law, and clear, predictable regulatory standards. Canada offers exactly that. Its fundamental predictability provides a stark, compelling contrast to global political turbulence, making it an essential magnet for capital focused not on speculative gains, but on long-term preservation and sustainable growth. A pivotal moment in this story came not from a foreign investor, but from within Canada itself. Canada's public pension funds, collectively managing over 3 trillion Canadian dollars in assets, have historically invested most of their capital abroad. But spurred by a changing global risk environment and gentle encouragement from policymakers in Ottawa, a significant shift has begun. These pension giants are starting to look homeward, recognizing that stable, predictable returns can be found right here. This pension fund pivot, even if gradual, sends a powerful signal to global markets. When Canada's own trillion-dollar funds increase domestic allocations, the rest of the world takes notice. It's the ultimate insider endorsement. Global investors reason. If those who know Canada best are investing here, there must be long-term value. That self-confidence becomes a catalyst, creating co-investment opportunities that are highly attractive to foreign sovereign wealth and pension funds. The abstract flow of global capital becomes concrete in the rapidly emerging electric vehicle supply chain stretching across southern Ontario and Quebec. This isn't just about individual factories. It's the deliberate construction of an entire industrial ecosystem, from raw materials to finished vehicles, all within a stable North American jurisdiction. Automotive giants like Tesla, Stellantis, and Volkswagen are pouring billions into building this ecosystem from the ground up. These aren't speculative bets. They are strategic, long-term commitments to secure their supply chains for the electric era, anchored in a politically and economically reliable partner. Take Volkswagen, which has chosen St. Thomas, Ontario, for its first-ever overseas battery cell factory. This is a project valued at over $7 billion, a clear signal of confidence in Canada's manufacturing capabilities and its role in the future of mobility. Meanwhile, in Quebec, Sweden's Northvolt is building its own $7 billion gigafactory. The key attraction? The province's abundant and cheap hydroelectric power, a critical advantage for energy-intensive battery production, and a powerful draw for companies seeking to build a green supply chain. These are foundational investments creating a high-tech manufacturing ecosystem for the 21st century, complete with skilled labor, advanced research, and integrated logistics. But this is only one side of the story. A quieter but equally significant stream of capital is coming from Japanese, Swiss, and Gulf sovereign wealth funds. This is patient, institutional money. They are buying long-term stakes in Canadian core infrastructure, like ports, renewable energy projects, and clean hydrogen terminals. This patient capital, focused on long-term, stable returns, sees Canada's predictable legal system, transparent regulations, and essential, hard-to-replicate assets as a perfect match for its investment horizon. For them, reliability is the most valuable commodity. The geoeconomic ripple effects are becoming clear as the global financial infrastructure that services this capital follows the money. Global banks are expanding their operations to facilitate this new wave of investment. Major players like Mitsubishi UFJ and Deutsche Bank are increasing their headcount in Toronto, building out teams in project finance, capital markets, and advisory services to support these multi-billion-dollar deals. This quiet expansion of financial services is a crucial reinforcing signal, solidifying Canada's role not just as a destination for capital, but as the anchor market of the democratic world. Of course, this path is not without its challenges, including the need for faster infrastructure rollouts. Canada must also grapple with housing pressures created by a growing economy and population, and an over-reliance on resources, even those of the future, remains a risk that requires careful management. But the long-term trend is clear. As long as the world remains turbulent, global capital trusts Canada more each year. Power in the 21st century is defined not by who drills the oil, but by who manages the capital. And right now, that capital is flowing north. That's Geo Capitalist, decoding why the world's money is suddenly flowing to Canada. If this breakdown helped you see where the next decade's power is moving, if you found this breakdown valuable, check our next video. It connects directly to what Canada is building. Share and subscribe, because the next shift in global wealth is already underway.